This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, April 22nd, 2016. Euro dollar. So a bearish outside day in the euro on Thursday does keep the door open for the possibility that the euro is topping out after putting in a recent 2016 high at 114.65. A break back below 112.34 will do a good job of strengthening that outlook, exposing next key support at 11.45 further down. At this point, look for rallies to continue to be well capped ahead of 114, with only a break back above 114.65 to shift the outlook. Sterling dollar. So cable continues to trade within a broader downtrend, and while rallies hold below recent highs at 145.15, there's risk for the market to stall out yet again ahead of the next downside extension below key support at 140.05, which guards against that recent 7-year low at 138.36 further down. At this point, again, only back above 145.15 would delay the bearish outlook for sterling dollar. Dollar yen. So dollar yen has enjoyed a nice little recovery in recent trade out from multi-month lows, but overall, while the market holds below the previous 110.67 2016 low on a daily close basis, the risk continues to be for additional weakness back towards that measured move objective, which comes in at 106.50 further down. At this point, only a close back above 110.67 would delay this outlook, though it wouldn't compromise the broader downtrend at this point. Really, a breakback above 114.87 would be required to force a significant shift in this structure. Euro Swiss. So some impressive gains in Euro Swiss over the past several sessions, with the market rallying out from some formidable support down around 108. A break above 110.24 will do a good job of strengthening the constructive outlook, exposing a move back towards the recent multi-month highs at 112 further up. At this point, setbacks should continue to be very well supported ahead of 108, with only a break back below to compromise the constructive outlook for Euro Swiss. Aussie dollar. So Aussie is finally showing signs of topping out after stalling ahead of some key medium-term resistance at 78.50. The market had traded up on Thursday to a fresh 2016 high at 78.35 ahead of this latest minor pullback. At this point, though, we would need to see a break all the way back down below 74.77 to take the immediate pressure off the top side and put the focus back on the downside. Dollar CAD. So dollar CAD is showing some signs of potentially wanting to base out after putting in a bullish reversal day on Thursday. However, at this point, we would need to see a break back above 29.90 at a minimum to take the immediate pressure off the downside and suggest the market is really looking to base out. Otherwise, the pressure remains on the downside for a potential move down towards key psychological barriers and a measured move at 125. Kiwi dollar. So Kiwi has pulled back this week after trading up to a fresh 2016 high at 70.54. The market continues on a medium-term basis to be very well capped up towards and above 70, and there is risk for deeper setbacks over the coming sessions. But ultimately, the market will need to break back below 67.59 to really strengthen the bearish outlook and accelerate declines. Until then, there's risk for maybe some more upside or consolidation. SPX 500. So the S&P 500 has rallied all the way up to within a stone's throw of the 2015 record high, stalling out above 2100 though at 2112 thus far. At this point, there is risk for the market to start to look exhausted and stall out after putting in a bearish reversal day on Thursday. Still, at a minimum, we would need to see a break back below 2065 to really strengthen this outlook and open the door for an acceleration of declines. Unless the market closes back above 2100, there is risk for a significant top at current levels in favor of a major downside extension, potentially exposing a retest of that 2016 low at 1808 over the coming days and weeks. Gold. So gold hasn't been doing much in recent trade, but it has done a good job of staying well supported above some previous resistance at 1190. While the market holds above that level, expect some consolidation ahead of an eventual break higher above the recent 2016 peak in the 1280s and towards a retest of the 2015 peak at 1307 further up.